So let's see what swing points are. These are all very important lessons that we need to learn if we are to be able to make money in the forex market. So we need to know, understand what swing points are. And so what are swing points? We are saying that a swing point is a price point from which a major or a minor trend reversal happens. That means if the market is moving, we understood about that. So we understood about what market structure is. We said the market moves in this manner. So we said also a downtrend will be moving in this manner. And we said a consolidation will be moving in this manner. Now, if you look, if I tap on this, you can see that it puts for us swing point. So this is a swing point. 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 It's a price point from which a minor or a major trend reversal happens. So if I put this is now going to become my swing point. This is going to become a swing point. This is going to be a swing point. This is a swing point. This is a swing point. Just make it just that simple. As long as you see the market changing from where it was going and reversing or turning the direction, as long as the market turns the direction, that is a swing point. As long as you see the market turning in the direction. So for example, here, the market is moving down, but when it reaches here, it pushes up. So this becomes my swing point. This is a swing point. This is a swing point. This is a swing point. Let's just go to the charts and look at what I'm talking about. So if I told you to mark out swing points on this chart, let me start from down here. So when we're here, the market was moving up. This is a swing point. So the market was moving up. And then when it came and reached here, it turned down and moved. It turned and moved down. So when the market reaches here and turns and moves down, that becomes a swing point. Now, the minor ones or the micro, really, really small turning points are this. So we have this as also a turning point, and we have this as also a turning point. Those are the minor ones. So we have this as a turning point, and we have this as a turning point. This as a turning point. This as a turning point. You can mark so many of them. You can identify so many of them on the charts. This is a turning point. The market turned from here and then went up. You can see the market turned from here and then it went down. When the market reached here, it turned from here and then went up. So the market reached here and then turned down. When the market came and reached here, it turned and went up. Reaching here, the market turned and went down. When we reached here, the market turned and went up. So we reached here and then we turned down. There's also these small ones, but I'm going to leave that. This is also reached there and turned and went up. The market reached here and then turned down. When it was coming down, it reached here and then turned up. These are all swing points. Swing points, swing points, swing points, swing points. You can mark as many of them as you can on your charts. Anywhere, anyhow, you can mark them anywhere. This is a swing point. This is a swing point too. There are so many of them. This is a swing point. Okay, we have a swing point here. We have a swing point here. We have a swing point over here. We have a swing point there. And then you can mark as many swing points as you can identify on the chart. Now, this is also going to be very, very significant for you. You need to really understand what swing points are because they are going to help you so much in making very, very major decisions at the end. When we are creating the strategy, when we are developing our strategy, like I promised, we need these points. So you are going to need to have these swing points in your arsenal so that they are going to help you so much. Now, these swing points are divided into 4 categories, but into 2. Now, the first point is we have swing highs. We have swing highs. We also have swing lows. And then from the definition, we have also 2 in the definition. We have the minor and the major. The minor and the major. Now, let's simplify this. Simple. A swing high is a point where the market turns from an uptrend to a downtrend. And the swing low on the other side is a point, a price point, where the market turns from a downtrend to an uptrend. Does that make sense? So this is going to be a swing high. This is going to be a swing low. This is a swing high. I'm going to reduce this. That means that's going to be a swing high, and this is going to be a swing low. Does it make sense? This is a swing high. This is a swing low. This is a swing high low. This is a swing high. This is a swing low. This is a swing high. This is a swing high. This is a swing low. As long as the market is turning from a previous uptrend to a downtrend, it becomes a swing high. From a downtrend to an uptrend, it becomes a swing low. Just that simple. And then your major ones, we have now major. So if I was to mark a major swing points, this is going to be a major swing point. This is going to be a major swing low. Swing high, swing low. Now the micro ones, the ones inside, they are going to become the minor swing lows. Let's put it simple. A major swing point is a point on a higher time frame. A minor swing point is a swing point on a lower time frames. Because remember, we have so many time frames. So you can have from 1 minute to 1 month or to 10 months or 10 years. But the point is, as long as you're working with the lower time frames, we are going to have minor swing points. And then if you're working with the higher time frames, we're going to look at major swing points. Again, we are day traders. So because we are day traders, we are going to consider 4-hour time frames and 1-hour time frames to be our higher time frames, and the day is going to be our higher time frames. Now, 15 minutes and even 30 minutes can be a high time frame. 15 minutes, 5 minutes, 3 minutes, 1 minute, 2 minutes, whatever, anything below 15 is going to be our lower time frame. So that means swing points that you're going to mark on 15-minute time frames are going to be minor swing points. And those you're going to mark on the higher time frames are going to be major swing points. I think that is also very, very simple. So that's what swing points are. I hope that's a little bit well established. So those are swing points. Like I said, we are building this and you're going to appreciate them at the end of the day when we are combining all the things together to be able to get daily trades every single day with our unique strategy that we're going to develop. All right, so thank you so much. Let's see you in the next video.